Where are you buying right now in tech, David?
Yeah, Sarah, I mean, obviously this backdrop that we're looking at in terms of protectionism being pushed forward by the Trump administration is leading to smaller markets for companies in the tech sector worldwide, something that really doesn't help aid growth prospects. So in terms of looking at this pullback, you know, the market down 20% roughly since the end of September, we see opportunities in names that are domestically exposed and ones that aren't necessarily dependent upon global supply chains that are being disrupted. So we think certainly in the case of looking at Amazon, certainly very, very much a play on the developed country economies and the disruption taking place in retail. Amazon still very much an attractive company in that regard. Certainly the pullback makes us think about trying to commit, maybe not at these levels, but certainly to be thinking more about it as we move into 2019. Other companies that are being used daily that aren't necessarily as exposed globally, or at least to China or tariffs, Microsoft is one. And then also, last but not least, Netflix. We think even though there's going to be rising competition for other companies in the content creation area, Netflix, we think, has good momentum going into 2019.
And that's because Netflix is not affected by trade, and therefore the valuation pullback is an opportunity.
Exactly. To the extent that we're looking at the market pullback as a whole, I mean, obviously, if we look at the impact of protectionism, what that basically leads to is a world where companies have smaller markets, where we basically have rising costs, and we have slower growth. And I think the market pulling back here basically is the market as a whole normalizing to a higher inflation, slower growth environment. Have we finished doing that transition process as of yet? Obviously, to some extent, that's dependent upon what does the administration do next on these fronts. But obviously, there's a lot of bad news to deal with.
So, I mean, I get your fundamental thesis that a lot of this is supply chain related and trade related, and there are some real concerns there. But what about Santelli earlier, I think, put this all into context where he said the central bank was easy. Easy money was flowing for years and years and zero interest rates, and the market was used to it. And these names, Netflix, Amazon, Facebook, these were all the biggest beneficiaries in the stock market. And that trade is just unwinding as the Fed becomes more restrictive, as we get toward a more normal policy. And I guess my question is, if that's the real reason here, how much more downside do some of these names have to go as this big unwind plays out?
I mean, the issue here is not to pick out just one reason. There are confluence of factors here. Obviously, one, the monetary authorities did need to basically unwind the quantitative easing we'd seen since 2009. Eventually, we're going to have another recession. You need to have tools available for central banks to use to offset the impact of that. Exacerbating this withdrawal of liquidity under the reversal of quantitative easing, obviously, is this move towards protectionism, which basically gives us a double whammy that the market certainly has been having a difficult time handling. And the question is, how much longer does this negativity play out into 2019? That said, we do think that there are some names here to look at in this downturn we've been going through.
What do you make of the fact that Alphabet and Facebook are one of the two, probably the two of the only names in the communication services sector that are higher right now, and actually higher on the week? The fact that there's clearly some nibbling, to use a word that's been used a lot here on CNBC today, in those names.
Yeah, I mean, the nibbling really boils down to expectations about, is the 116th Congress, when it convenes in early January, still going to be focusing very much on social media and the need to regulate that? I mean, a lot of the news that's continued to come out relative to Facebook, Google, social media companies, and the interference of foreign powers in U.S. elections remains unaddressed. I mean, certainly because of those reasons, which I think are very high from a national security standpoint, these are companies which are going to continue to be under scrutiny. We see a little bit of hope here as far as this bounce is concerned, but I don't think it lasts.
So just to clarify your timing, you think now is a good time to get in on some of these names, or do you need to wait to hear more clarity on whether trade with China, trade talks are going well in the new year with China, and whether there's any kind of deal that can be struck within this 90-day period?
I mean, you can start thinking about scaling into Microsoft, into Netflix, into Amazon. Amazon, you might say, is at its seasonally strong period. So that would be more of a short-term trade. But a name like Microsoft or Netflix might have a little bit better levels here if we were to look at going into 2019 with these names long in the portfolio.
Which ones would you stay away from, David? As I'm just looking here, session lows with minutes to go before the close. The Dow is down 600 points. Which tech names are you avoiding?
I mean, I would continue to stay away from Facebook and Google for the reasons we talked about, which are more government regulation oriented.
Yeah.
But obviously, Apple's having some difficulty here. The fact that there's this battle between the U.S. and China over Huawei is certainly going to make things more difficult. So I don't think Apple's necessarily found its low here. So those are some of the names I would stay away from.